What's going on, guys? We'll get started in a second. Just give me a sound check. Quick sound check and we'll be good to go. I listened in on the stream last week. Some of you guys are complaining about a little static. I couldn't pick up any static on all the devices that I listened through. So I'm not sure what the cause of that is. It might be listening on a phone. But again, I was listening on a couple different devices and I wasn't able to reproduce any static. So I just reshared the link. So we'll get started in a second. Hopefully you guys are doing well. It's Sunday evening, 7:30 p.m. in New York, and I actually enjoy the evening streams. I think the last time I did a stream was on Sunday as well. It's nice. My daughter goes to bed around 6:30. My wife is doing her thing, and it's chill mode right now. And I find that if I stream, or if I try to stream like during a trading session, during the New York session, even lunchtime, like I can't get into it. I'm like consciously aware of the fact that I am using bandwidth that I need for the trading day. Whereas right now, we'll just shoot the shit, keep it casual, go over some expectations, plans for the week, and as if that's something that we could really be too certain about. But take some questions and wrap it up. Hopefully we'll keep this pretty short, similar to the last one. I think the last run time was just over an hour. So ideally we'll keep it short, actionable, and let you guys get back to your evening. But we'll get started in another minute. Still some static. All right. Yeah, I'm not sure what that is. Like I said last time, I let my daughter come to my office, and she likes playing with my desk now because the buttons are on it that raise it up and down. And there's a couple times when some wires might have got crossed. So I can't promise that I will audio engineer that because honestly, I don't care to stream that much. If I aim to really monetize this YouTube, maybe I'll get down to the nitty gritty when it comes to sound quality. Cool. All right, so we'll get into it. For those of you that just signed on, I'm the Flow Horse on Twitter, previously known as Cantor & Clark. And yeah, I mean, we're going to take a look at BTC. We'll take a look at ETH. I will give some of my thoughts on alts, take questions, and keep it casual. Like I said, it's Sunday, so futures just opened. Gold is up significantly, and I just posted about gold being up on Twitter. Gold is up. Let's see where gold is at right now. Gold is up quite a bit for a Sunday evening move. So, sec. So, pulling back a little bit right now. But I mean, it's pretty weird for gold to put in this kind of move on a Sunday open. It's unless someone's getting carried out right now, which I don't think is probably the case. Gold is usually a significant move in gold is can be from a few different things. Obviously, there's conflict right now, so you have sort of that global instability bid. But this is something just I guess to keep on your radar, because I've said many times before, for anyone who is, obviously most of the people that probably tune in are predominantly crypto traders. Bitcoin does like to be, and it sort of has the benefit of being able to be a chameleon of sorts, and to sort of change identities when it's beneficial to do so. So I'd say for the most part, of course, it's, a higher beta risk asset, trades a lot of times trades like a tech stock. But then it also, there's times when it does follow gold, and you just obviously want to have as many things working against your sails, or at least have the wind against your back and be sort of pissing with the wind, swimming upstream. So if we have, we obviously have people buying in anticipation of, the ETF on January 10th, those being green lit. You have the halving coming up, and if you have risk assets across the board, remaining somewhat bid, and then you have gold moving up. It's like, I mean, how many things can you have on your side, in terms of really no excuse to not continue to move up. But like I said, gold's not one to put in arbitrary moves on a Sunday evening. So someone had mentioned that this might be from the attack in the Red Sea, which is possible. But we'll keep an eye on this. I don't want to talk too much about gold because I don't trade gold, and I don't like to macro larp personally. But anyway, I had posted just before that, just kind of covering some of the things I had just posted on Twitter, talking about, so I shared a chart, and this chart right here is, I should have mentioned this or annotated it so you guys, a lot of times I just take for granted that someone's going to understand what I'm referring to. I mean, it's a really bad habit because I have obviously too many followers to do that. I have my volume chart, but then this down here, this is actually this is a premium discount indicator, and you could select the assets that you want to compare against each other. So this is going to show you, in this case, the premium or discount between the Coinbase BTC, right? So BTC USD, and in this case, a front month of CME futures contract, so BTC1. Or if you're on the CME, this is the symbol right here. This is December contract. So what we're looking at ultimately is, over the past couple months, this market has been, there's been a significant amount of the flow coming from the CME. And I think the CME, is it the case that the CME has still flipped crypto native exchanges? That might've been on and off. So open interest is it at all-time highs? No, it's close to all-time highs. And then looking at volumes, I mean, we're up there. And you have to remember that the money that comes through on the CME, I always say that this is something to keep in mind because this has happened before where the CME there's been more capital at play on the CME than, let's say, Binance, even though Binance had, greater open interest and more volume. And the reason is because if you have, let's say, the CME and Binance, for example, right, just for the sake of example, if you have them trading at par or neck and neck, on Binance, we know that, and on crypto native exchanges in terms of just trading perps, right? So compare perp, which is, perpetually settling futures contract versus the front month contract, which most of the activity is going to be on the CME. So whether you're trading the ES, whether you're trading the NQ, in this case, BTC. If we're looking at, if they're neck and neck, right? BTC on Binance, so a crypto native exchange, and then BTC on the CME. Even if the CME has a slightly less volume and slightly less open interest, there's more capital at play on the CME, right? Versus Binance, or at least we could assume that, because on Binance you have, and across the board on crypto derivative exchanges, you have access to up to 100x leverage. Whereas on the CME, it's very specific. You have basically 33% margin. So, each contract is 5 BTC. You have to put up a significant amount of money to actually control that position. And those change between the intraday trading session and then overnight rates. So needless to say, I would say that I take the CME positioning a little bit more seriously, but I do want to also remind everybody that there is sort of this, assumption that TradFi and people on the CME, or even the same way that we have that when you're kind of young and dumb, you assume that pundits know what they're talking about. There's this assumption that there's like smart money, and the CME is kind of like a leading indicator, and the smarter money. A lot of the times it's not the case. It's just literally humans in this market and humans in the outside of this market trading the same asset. They're the same. Like most of the time, you're not going to see that it means anything extra, right? Or that they're privy to any kind of information that the majority of CT isn't. Where everyone's kind of aware of what the original catalyst is behind this move and what people are buying in anticipation of, what expectations are. And expectations, obviously, one of the things that move markets most significantly. But needless to say, like, even though, I'm pointing out the for example, the CME activity, not as like, okay, the CME activity is, it's kind of the dog wagging the tail, even though in terms of volume and open interest, I guess you kind of say it is. But more or less because I think that the fact that it is where the dominant amount of open interest and the dominant amount of volume is, that venue is where the dominant amount of that flow is taking place. When it does change, I think that is a signal that I would want to heed, right? In aggregate. So if we look at, for example, the behavior from month to month, crypto, BTC on crypto exchanges, we saw significant flows to the upside as a result of actually the CME contracts being rolled. So that's it. That's a decision that someone who's long a CME contract is making. They're saying, okay, I'm willing to sell low and buy higher each time they roll up the futures curve, because the futures curve is in contango, and from contract to contract, it's pretty steep, right? If you look at, this is a 10-minute delay on the CME's website, but for example, the last traded price on the front month, 40,600. The next contract in January, 41,100, and then February, 41,460. So to roll, you have to sell and then buy higher. So that's that roll yield, right? And that's why ETF, futures ETF or any kind of futures-based product is not as preferred as a spot product, right? Because they get that exposure by rolling up, especially if the market is in contango like this, having exposure through futures product is not going to be beneficial. But I'm speaking in circles right now. What we do want to pay attention to is whether or not that sense of urgency to be exposed is still there. And I think this is going to be a more telling roll, this upcoming roll, because it's rolling into January month, and January 10th is, what everyone assumes to be. Everyone assumes January 10th to be the date that the ETFs are going to be approved. So what we want to see is whether or not all this positioning is interested in maintaining exposure through this event. And one thing that you can, I would say that, my experience is that funds and I hate to say smarter money, a lot of the times are not just going to YOLO through a catalyst or through an event. So this is something that, I'm kind of in the air about, right? Are they going to sell just leading right up to it? Are they going to hold through it? A lot of times you don't see, again, even fast money, hedge funds. It could be a different story now because it's no longer really the bear market. Whereas in the bear market, if you got a 2x, you fucking took it off the table right away. So maybe they are more prone now toward holding through this. I don't know. But the point is, this next roll is going to be significant. Every other contract, they've rolled into the next contract, continue to buy higher, and as a result, pay the premium to do so. Think about it. We know that this market is really bullish when people are willing to spend, or people are willing to pay the decay of an interest rate on a perp product, right? So if you're in position and the funding rate is high, your expectation is, if you're going to hold that position at least, that it's going to continue to rise at a rate that exceeds the current funding rate. So you say, hey, for example, funding rates across the board, this is, I believe this is accumulated funding rate, I think is CoinGlass's language for annualized. But if you look at this, for example, if we look at just one day, should be around 1 basis point, 3 basis points. So funding is getting a little elevated because the market is obviously breaking through significant levels. You're going to have people sort of willing to pay the cost for that increased exposure, right? Just supply and demand thing with leverage products, right? So, but the point is that if 3 basis points is not a lot, if you expect that the market is going to move well beyond that, right? It becomes significant if you're paying this cost, right? If you're paying over the course of a week, if you're starting to, so in this case, a week is 20 basis points, so a fifth of a percent, it'll really start to drag on you if the market is no longer moving up significantly, right? And you're going to start giving away some of your position due to this interest rate component. Sort of a similar situation when you think of CME products and rolling up the futures curve and being willing to consistently buy higher, because if the market is really bullish, that contango is going to continue to steepen, right? You're going to see those further out contracts continue to sort of spread out from the front month, and that ultimately means you're going to be buying much higher. So a lot of words, but again, not looking at the CME as saying, okay, these guys are, they know something. I think they know the same thing that everybody does, but because there is such a significant amount of flow there, I don't want to stand in the way of it if they suddenly start changing their behavior, right? So it's just starting to look for paying attention to the signs, right? Paying attention to the omens. I posted something yesterday saying, the music's still playing, I'm still dancing, but I'm dancing closer and closer to the door right now. I think that we're getting to a point where I think we're going to have a blow off top. I think we'll have a local blow off top. We'll have some kind of extended move. It kind of just feels like that in the air, and it's weird to put it that way. And before I get into talking about BTC, I've talked about how you have to be able to switch in this market, and you have to be somewhat. If you're a generalist, you'll crush it in this market. But when the market is trending and when the market is moving on momentum, I just honestly defer to some pretty basic strategies, and a lot of times it's going to be using simple moving averages just to determine how stretched out we are, who's in control. It's clear the bulls are in control. But it's something that I lean on a little bit more rather than focusing on sort of the more granular order flow stuff, right? So as we begin to trend, I pay a little bit more attention to some basic momentum tools. I pay attention to broader positioning instead of like focusing in on, 5-minute CVD diversions. So for anyone who's new, wondering what this is, it's always for me just a 20-period moving average. So 20-period moving average, looking at that on either the 4-hour, the daily, and the weekly. And it's not a set science for me, right? I've been doing this long enough that I feel like I have it down. I mean, I've been through multiple cycles at this point and done a really good job of getting myself out of trends, at least 10-15% within the top. And then you're also looking at this white line, which is just for the sake of anchoring it at the beginning of a really strong year, and ultimately most of these moves, it is the yearly VWAP. So yearly VWAP and then one standard deviation band. But anyhow, BTC through a very significant level, big round number, 40,000. It does feel like right now that you could sort of hit the broadside of a barn, right? I mean, hitting in this market, or should I say just punting at anything and making money is easier than hitting the broadside of a barn with a ball. I think that's saying sort of extends across the world. I hope it's not just a thing in the United States, but there's something in the air right now, right? People are sharing screenshots of P&Ls, right? There's a lot of the chats that I'm in. The question is, what reason do you have to be bearish right now, right? And actually, oddly enough, everybody asking that question makes me a little bit bearish, right? So I just start to be a little cautious. I said yesterday, and it's really important to have self-awareness, right? I've talked about the concept of a cheer hedge for a long time. Brent Donnelly was someone that I learned it from. But the idea of like when you're cheering your positions, when other people are cheering their positions, that might be time to either take the other side or begin to remove some risk. And I know myself, and yesterday I called for 50K. I posted something like 50K BTC, very easy, not for nothing. It's not difficult for this market to move up that much. I mean, in the past, when the train gets going and we're back accepted within a prior area of price that has rejected us for a really long time, I mean, it tends to be the case that it's one-sided for a while, and it always feels like it's going to top out. But I called for a price that was $10,000 away, and that to me was just like, okay, got to be careful. This is like one of the signs in yourself that usually kind of is found around at least local tops, right? Your excitement is beginning to boil over. Up here, we did see the premiums come back in a lot of the futures across the board. BTC, not so much spot led the entire time. But again, Michael Saylor's in the money now. This is going to be something you're going to have to deal with for a long time. This is why it's useful to deal with, or rather use more systematic methods when the market is trending, because you will overthink things. So at least I know, like, if I'm using a 10-period, I'm sorry, I forgot to mention that before, a 10-period and a 20-period moving average, if that's giving me a really ugly signal that I've relied on in the past, or I've known has kind of accompanied turning points, I know that I should lean one way a little bit more. And if I'm going to try to be somewhat systematic when the market is trending, it's actually, no, I should put it differently. You shouldn't really be somewhat systematic. You should try to be as systematic as possible. At least that's my opinion. When the market is trending, you want to be able to lean on some kind of systematic entry and exit. You have to be willing to leave some on the table, right? Be willing to buy slightly higher and sell slightly lower than the top or the bottom. But yeah, I do think we're going to blow off relatively soon. A couple things also that I forgot to mention. Alts are a little bit more disconnected now. So there was a rising tide for a while. Now it's become quite obvious over, the last week, I'd say that it's becoming more of a picker's market. Specific areas of the market are gaining attention to the detriment of others. I don't know if I said that correctly. Certain areas of the market are getting penalized, and that capital is flowing into other sectors of alts, but it's no longer the case that everything is really moving kind of lock and step. So that's something worth considering. BTC on this more recent move up, it's something that does happen. You'll have capital flow out of alts and jump into BTC. It seems a lot more contrasted. It seems a lot more, extreme for this more recent move up, like a small move up above 40K. It's not a small move, but a lot of alts just kind of beginning to bleed a little bit. And a lot of alts already look like they're kind of distributing for a larger pullback. This is something I always keep in mind. So when you have sort of this pinch, when alt open interest is significantly rising and BTC open interest is dropping, and you're seeing sort of the seesaw of money between both, BTC flowing out of BTC after a big move into alts, flowing out of alts back into USDT, or stables in this case. In most cases, this sign during this sort of pinch during the bear market is useful, but in a bull market, ideally this money flows back into BTC, back into ETH. So it's a tough spot right now, honestly. I don't see any reason to be bearish, like high time frame bearish, but I do think that we're looking at a blow off pretty soon. A blow off means if we're at 40,200 right now, it could be a candle that moves 2-3K up, and who knows where it tags. But the idea is, I don't think we're going to roll right here, but I think we're going to get something exhaustive. The market's starting to move a little bit vertically, as if it hasn't been. We have the ETF January 10th. That's something that from a spot standpoint, I'm not changing much. A lot of my positioning when I'm talking about trading right now is strictly futures. I can't see any reason to sell spot positions. Honestly, I've said this many times before. A lot of it comes down to a tax advantage standpoint. As far as long-term capital gains goes, as far as what I think this cycle is going to, what the results of this cycle will be, I think it'll be favorable prices to sell at post ETF. I think it makes sense to hold at least into the first week of January. I think sort of very basic game theory, like people want to be long into this. Every dip that we're getting is getting bought back. As far as the blow off top goes, similar idea as what I said during the last stream. It might be better to miss it, right? If you are away from the desk for a day or two, it's the kind of thing where you have a blow off and then we have a big whipsaw. And let's say BTC, for example, BTC hits 42 or 43. We get a cascading liquidation through this kind of semi-weak structure, and then we snap back, and then suddenly we're starting to base out again back within this value. So we could have a move, an exhaustive blow off, right? Some kind of blow off top, 42, 43, just picking those numbers out of my ass. And then, we whipsaw down all the way through 35, 34 region, for example. And then who knows, we're right back at like 38 a day or two later. So I would just be careful right now. Buying the highs, but also, after this kind of move, really flipping bias. So not this move, but after a blow off top, I would be careful getting overly bearish. My whole thing is like the market is structurally, it's kind of setting up for something like that, just because we have sort of these incremental higher lows that do tend to see stops clustered below them. Where does the market need to go to get the most people involved? I think that a lot of the times that is down. And yeah, so 42K is someone's target in the chat. Just trying to think of other things I wanted to say with BTC. Take a look at the tape. I say blow off top soon, but I'm not going to pick a price. But at the same time, I remember this back here. Going back to 2017, and how this is one of the reasons why you want to be somewhat systematic, right? Or at least have something else you could lean on that's less subjective than just feelings, because there's going to be entire points within, a really strong move, right? This entire move up where we could have had the same kind of conversation where it always looked like it was going to top out and the market felt overly bullish. So it's tough right now. I'm not going to change too much positioning. I picked up, so good transition. Someone just asked about ETH. So we'll head over to Synquote. So actually Synquote, this is a phenomenal platform. So you could see, so for example, what you're looking at right here is, this is the Synquote DEX. Now I only put on just enough to control a position that I have open on this. So right now, my net worth of $36,732. That is all dedicated to this premium for the January 26, 2600 calls. So this is a pure directional move. This is not a spread. I have initially I was eating theta, so yesterday buying right into it, about $700 a day. But I bought 400 contracts of, average cost for those was 83 for the first 200. It was creeping toward 85, 85 average basis right now, 85.50. I think it's kind of foolish to, so a couple things, right? So one, check out Synquote. Again, phenomenal DEX, best DEX there is right now for options. It's on par with Deribit in terms of liquidity. So it's RFQ, so it's request for a quote. There's a lot of things I can't say that are coming in the next month, but I'm very excited. I've been on the team, the core team now for a long time. So I use the platform. It is where I trade options. This is a significant position, right? So this is around 900,000 notional. And it's because I'm really confident that the market is sort of underappreciating ETH right now. So what I think is that the market has been, everyone is really certain about BTC, and everyone's really certain about BTC in terms of on the CME and from an option standpoint. So if you look at something like, for example, 30-day, 60-day, 25 delta skew, it's been for the most part, as positive as we're going to get, we could go back a very long time. It makes sense to buy calls. It's not like it stopped making sense. A lot of people buying calls in this range have been getting penalized, right? Bleeding out. But I said last week that because of this, puts were, from a cost standpoint, it kind of made sense if you're trying to hedge some possible tail risk of a denial, like to pick up some puts. But the certainty that we're seeing in the options market for BTC is not really there for ETH. So the market is unanimously bullish, long calls across the board for BTC for the last couple months. Nothing has really changed. You're starting to see a slight change in those flows. Like we talked about this the other day on the Synquote Spaces with Tony Stewart, so Pelion Cap, he's an absolute options genius. But the same behavior is not really being seen in ETH. Like ETH is definitely underappreciated. After the whole Solana move, ETH is very underappreciated, right, as an L1. And I don't think that things like this, I honestly don't think the fundamentals matter as much in this market as positioning. So the fact that most people have their attention on Solana, most people have their attention on BTC, And ETH is kind of being mocked, right? Because it's not kind of following through with the same intensity that everything else is, I think is setting up for a big catch-up play. So from a technical standpoint, ETH looks like it is just beginning to break out, right? And in a similar way that BTC has already done a while ago. So I'm confident that this is going to catch up. And I'm confident that, when BTC cools down and, after January 10th, ETFs approved, right? Fingers crossed, that we're going to see a lot of capital flow back into ETH. I think you could expect that some capital that's in Solana, right, will flow back to ETH as well. So I think just from a cost standpoint, in terms of how the options market is pricing one over the other, this is a pretty strong bet that I'm willing to make. And again, I'm not doing anything to limit my upside, but I'm not doing anything to. So I could be long a call spread, right? I could just sell something a little bit further out, and this is out of the money already, but to sort of help this bleed, because there is a significant amount of bleed if the market's not moving. But I'm this confident in the position that I want to just hold this naked as it is. So yeah, I think ETH is going to catch up. I think people are sleeping on ETH, and I think I like, honestly, when I see that people are, they are, it's to the point of mockery almost at this point. If you're in ETH, you've picked the wrong horse. Everyone's in, everyone is behind Solana now, and ETH is too expensive. Sorry, wrong pipe. Yada yada yada. You share the same timeline I do. All right, so excuse me. That is, when you get something down the wrong pipe and you try to act like it's cool and you're okay already, but you're still choking to death. As far as alts go, I mentioned this today. I mentioned this yesterday. Just a very clean technical move. I can't sell DYDX. This is something I just have to buy. So I bought more DYDX, right? This is a DEX, so it's a really strong narrative. It's getting stronger and stronger as time passes, and they continue to crack down on centralized exchanges, and you can imagine that is not done. So I'm more focused on DEXs than ever, and more focused on them, not from a user standpoint, honestly, but from a token standpoint. So this is a nearly two-year range breakout. Said many times before, big ships turn slowly. So if this is a real change and prices are being accepted up here, I'm giving it time to do so. So as long as we hold, and I would say it's probably right around honestly, the $3 level, I've seen no reason to sell this. This is something I want to hold on to for a little bit of time and sort of give it room to breathe. This had an unlock. So this had an unlock a couple days ago. Throughout this period, the unlock was absorbed. If that doesn't mean something, I don't know what does. You have a significant amount of supply that comes into the market. The market remains bid. That's obviously it's indicative that there's a change of conditions, at least, because anytime during the bear market, unlocks were they were decent sells. So this is a clear sign that there's a shift that's taken place. So DYDX, I said this during the last stream. Almost all the alts I'm focused on. So TIA, Maple's relatively new. So when I say focused, I mean have positions in. What else is there? Ordinals, Flip. So all of these have something in common. The thing that I have that is in common with them, between me, is that I don't know a ton about them. I'm somewhat serious. But no, more importantly for me is that these are, so I know about Flip, right? I have a pretty gross position on Flip in terms of size. This is comparable to Thorchain, so comparable to Rune. About a 25th of the market cap. You know how this market likes to play catch up, but more importantly for Flip, for Celestia, for however you pronounce this, is that they're new. So beginning of a cycle, I think that you want to focus on what is new, what is novel. And I said this, and I posted a short talking about this. What does not have sort of the burden of really bearish extended price history. So when you're looking at, like, you know, think of, let's look at EOS, right? You come to this market and you look at EOS and you look at all this and you think, well, regardless of what's bullish down here, even if there's a change in market structure, you know, if there's a change in the environment, whatever it is, it's almost impossible to overlook all of this, right? So you look at this, you see a bullish move, you see a big move, right? You see a move that is, you know, multi-standard deviation move, and you look at every other time that happened, right? You look at every other time that it did something strong and then failed. You know how many narratives it's been through. You know, it's been recycled many times before. There's a lot of history to it. It's like it's not a virgin at this point, right? So this is, for some people in CT, they'll see a chart that's, you know, everyone has seen people share charts like this, right? And then we've done this for years, and they're talking about buying this just because it's based out this much, and they start to look at prior, you know, highs as, you know, oh, because it stopped going down, you know, everything in crypto just goes back up and does this over and over again. That's fine. There's a lot of things that have literally floored out and have no real supply coming back in. So it's like some of them, you know, Doge is a great example. Like Doge is not breaking 6. So if we look at Doge, yeah, I'll say this on the record, that Doge is just not breaking these lows, right? So regardless of, you know, of how extended this move is, you know, this floor is probably good to go. There's a lot of times when you'll see alts that have, you know, months of history that just honestly look like this, right? So it's just looking like it's based out. And you have a lot of people that'll buy those just because it's close enough to a really important contextual level that they could define a position around. What's more exciting is when you don't have any of that, right? And you have a chart like, you know, Flip, for example, that has just been up only, right? Because it's, you know, the possibilities are endless, right? This has just started. Who knows? Maybe this can be the next, you know, whatever coin. Retail likes being in on things on the ground floor, or what they perceive to be the ground floor or the closest, you know, point to the starting point. We know that a lot of times when you look at a chart like this, there are already people that are well in position from seed rounds that are up 5,000%. And, you know, that's something that's worth mentioning, because when you do have a chart that's new like this, a lot of times they do put in a big move up initially for the first maybe couple months, and then they do have a much longer corrective period where they're reaccumulated. And you might have something continue to move down 50% and wonder why, you know, there's a ton of selling pressure still, because you're looking at technicals and thinking, well, it's, you know, it's dropped all the way down to where it started. Why does it continue to see sell pressure come in? And it's because there are people that were, you know, seed investors that are still up. Maybe they're not up 5,000% at that point, but they're up 2,000%, you know, 2,500%. And they're, you know, they're not sensitive to that 50% move in price, because it's still, you know, they're up massively. But nevertheless, during this period of the cycle, I want to focus on pairs that don't really have any history. ORDI is a great example. If you could have something that doesn't have any history and also is technically, so let's see. So this goes back to, you know, it has history, but it has no like massive blow off top and then prolonged bearish period. This qualifies as new. So this is new. This has retraded back above, and I posted this before this move. So I posted this at 23, and this is already put in almost 100%, almost a 100% move. What I said was, and this is something that this is just a way that you should think, or try to think somewhat like this, is when you have a new chart like this, if you had this kind of prolonged pullback and consolidation, and then the market trades above its listing price, right, or trades above its high, everyone who sold too early, right? It's a simple concept, right? Everyone who sold too early. Everyone who sold was wrong, essentially, right? You can start thinking of it that way. If you sold, you were wrong, right? Because you sold at 19, now price is at 37. How do you feel about that? So moves like this after consolidations, right? Whether it's a drawdown or consolidation, anything that retakes its prior or its listing high or its all-time high and is new, especially when there's this very clean technical retest. This is buying all-time highs is actually a pretty good thing to do, depending on how much time has passed. So buying all-time highs after a month has passed, not a great idea, necessarily, right? Some trend followers might do things like that, buy, new, whatever, 30-day highs or 70-day highs, whatever system they're using. But it's more significant the longer the time has passed between those 2 points. All right, so this is a great example. This is going on over 6 months. So again, just not to this is not complicated at all. Like, you guys probably could figure this out on your own, but I think personally that the new coins will, and you could figure it out on your own if you looked at previous cycles. The new coins will probably do the best, honestly, right? Because there's not a ton of supply. There's no bag holders, really, there could be a bunch of supply, so I don't want to just say that and blanket that, depending on unlocks and, what the current float is compared to the outstanding float, right? FDV. But more importantly, no bag holders, right? So you're not, selling to someone that's waiting to get out for a long time now. So new coins and AI related pairs. So AI related pairs, I think that, and I've said this for a long time now, you're going to see a lot of projects pivot in a way that allows them to attach their name to AI. So honestly, that's what I'm most focused on right now. What am I thinking right now? Had something on my mind. Just been kind of riffing during this entire stream. Small cap, I actually bought this. So because this is on the screen right now, or you might not have been able to see that until I clicked on that. I don't know if you could see the tabs, but in case anyone's wondering, the loot box. So I bought this because I saw Messi was talking about it. I punted, and this brings me into, I guess, a good brief conversation about small caps. I don't know a whole lot about on-chain trading. I don't know a whole lot about small caps. It's very easy to just have a white paper, a website, and a bunch of promise, and it means absolutely nothing. When it comes to small caps, especially during this time in the cycle, I will just kind of punt what I consider throwaway money. So whatever number that is, I'm basically writing it off after I have bought. Okay, so I buy this. There's a couple other things that I bought. I don't want to mention them on stream because they're very illiquid. This I only pulled up because I think you could see the tabs up top. If you can't, well, I'm in this. But when it comes to really small things like this, I don't try to get fancy. Like if I buy a couple ETH, whatever amount, every time I've ever taken profit on a 2x, I remember last cycle, the thing went on to 20x. So what I'm doing right now is basically, like I said, allocating a certain amount of money to projects that I think, and based on sort of my own sniff test and people that I trust, projects that I think have potential, right? They're kind of lottery tickets, but putting out a good amount of, not a good amount of capital, but I am picking enough where I think that not a majority of them, but a significant amount of them should return well enough to make up for the ones that don't. But my take profit for them is more or less like time based. So it's not that I am, trying to determine where I want to take profit on loot or any of these other super small caps. It's not me micromanaging them at all, really. It's kind of me just buying them, throwing them on my ledger, and I want to come back to them in a couple months. Like I said, it's money that if it just went to zero, I wouldn't mind. But it is also, it's the case where if I took profit in a couple weeks and things are up 2 to 3x, I know that I have a lot of confidence about where we are in the cycle right now. It's kind of something stupid to say for a trader, but I've seen it enough times before where I take profit and then one of these things does 100x or does a 50x, and you're kicking yourself. So for a lot of these, I want to hold these as long as possible. So I just throw stuff on, if it's on ETH, throw it on a hardware wallet, make it difficult to panic sell it. But the invalidations, it's unless they're going to zero, the reason I'm exiting is a lot of times it's going to be based on set, forget, and really try to forget, and come back to these in a few months. So people ask me, and I'm probably rambling, but there's not a whole lot of science to this, because people do reach out to me in DMs and say, hey, like, where are you taking profit? What do you think about that? And I'm like, I honestly have no idea, man. I'm not an on-chain trader. I'm not really an alt aficionado by any means. So don't ask me, ask someone else. Any questions, guys? It's kind of been a little bit more of a rambling stream. BTC continuing to push. Let's actually just look at flow for this move. So another squeeze. So this is a really big squeeze back here. So we have I have stablecoin and coin margined, right? Long time ago I said the only time I want to pay attention to stablecoin margin open interest is when people are opting to use this product again, which means they're really confident and they're willing to be exposed to BTC as the underlying, right? Or margined in BTC. Whereas during the bear market, you want to be trading USDT margin contracts. It's the trading BTC margin contracts and being wrong is extremely painful, right? Because of that convexity, right? As the price of your position is going down, the price of your margin is going down as well. Your BTC is going down. Being wrong if you're long BTC margin contracts and you're wrong, it's way more painful than being short and being wrong, right? Because at least if you're short and the market moves against you, the margin that you're putting up to trade the position is BTC, so that's going up in price. It's slowing, right? So it's a negatively convex return profile. So it slows down on the way up and it speeds up on the way down, right? If you're long a coin margin contract. Some of the, I guess, more nuanced things about the USDT margin contract is if you're short USDT margin contracts and you're wrong, you have to buy back twice just to gain exposure, right? So you have to buy to close your position out, and then you have to buy to get long into the trend. So just some things to consider. But when the market is bullish, people are going to be starting to use the coin margin contracts more. So a lot of the time, over the last year plus, you haven't seen me talk about coin margin contracts or coin margin open interest because it hasn't been that significant. You're going to see a lot of people hedging in coin margin contracts when the market is moving down even a little bit, right? So you'll see for small moves down that you'll have a spike up in coin margin open interest, and it might not be the same corresponding spike or you might not have that in stable coin margin contracts. So just know that they're both worth paying attention to right now. But I mean, up into this move, more recently, like I said in the beginning of the stream, up until this leg, spot dominated, right? So isolate this for Coinbase. So futures have started to get a little bit hotter more recently, whereas they were fading a lot of the trend early on. So the blue CVD is Coinbase, and then red is coin margin, and then silver white is USDT margin. So, you know, as prices move up, people are going to want more leverage exposure. They're going to be willing to pay more, so they're going to be willing to pay a higher funding rate. It only becomes troubling when the market stops moving up and they have to hold on to that. But yeah, it's still the case that spot is still champing at the bit to continue to buy. So we don't really have any stark divergences between spot CVD and perp CVDs. So it's not the case that perps are just moving up and spot is not. So I said this during the last stream. If perp CVDs are moving up, whether it's coin margin and then USDT margin and spot is moving up, you don't fade it. Same works in the opposite direction. If they're moving in tandem, if they're moving together, those are really strong moves. It's the divergences that count, right? It's the cases where you have spot continuing to kind of roof and buy, and the futures products are fading that, are shorting, right? And then ultimately fueling each move up. So we've had a lot of that throughout this trend, where here's a pretty clear divergence right here. Perps, USDT margined, right? Coin margined moving down, spot moving up against those for those periods. And that was right before a significant squeeze up from, that was from the last period of sideways movement before this squeeze from 37.6 all the way up to 38.8. So everything right now is moving together. So this is definitely not something that you fade. So like I said early, starting to pay attention to the exit. Keep in mind that I think a blow off top is coming. That's how this is going to end briefly, or at least locally. But I'm not taking the other side of it. I'm not saying like, I'm going to short this. Just look at the chat real quick. So something that I would keep in mind, futures open right now, but I think another thing worth paying attention to, and this should be no surprise, is Coinbase. Look at this rip. Coinbase on the NYSE open. Are we going to blow off during this stream? Okay, let me just catching up to the chat. So I think the thing about BTC ETF approval is, I said this for a long time now, I think it's going to be a sell the news event. Let me say this. I think that upon approval, the market's going to move up, right? It's going to spike up. And then I think, short term up, so very briefly up. Midterm, I think we're going to correct and either move down or sideways. So for the month or two after the ETF, my idea was that we would have a corrective period. And then long term, I think it helps us continue to move higher, obviously. The thing that I'm kind of wrestling with right now is that actually, I didn't consider this. Let's say you get approved on January 10th. The earliest you have a tradable ETF is probably 2 months from then. So you know, there's potentially a whole nother, there's another 2 months to create expectations and to potentially long into and to kind of throw into the you know, gas tank of narratives and burn that too, like we've done with everything. So, you know, do we have a spike up that corrects, right? We have a nasty pullback, and then the market just starts getting long again because, you know, ETFs don't list right away, and, you know, when they list, it's going to be really bullish. And, you know, the idea is like the market has another thing to look forward to, not just the approval of the ETF, because the approval of the ETF comes, and then because it's not listed right away, it's, you know, is it going to be really bullish, you know? So just things that I'm wrestling with right now. Personally, all the conversation I'm having right now is, you know, decision making around trades. It's all around futures. So I'm not messing with my spot because, like I've said, I'm at the point now where I'm in a really good tax standpoint. I'm from a tax standpoint, things look really good. So I established some really nice positions that I want to, you know, it's going to be, it's not going to be threading the needle, but because I'm really confident about us being higher, even if we dip slightly, it makes sense for me to hold out a little bit longer. So I can't really see changing spot for a while. Or getting overly defensive, you know, flattening out or anything like that. Just looking at depth. This is Binance. A little bit of a pocket below, but big level at 42. Nothing crazy, actually. Coinbase. It's heavier on Coinbase above. So this right here is bid-ask ratio. So order book delta. So what you're looking at is, this is indicating that there's a lot more stickiness above than below, which you kind of can get an idea if you just look at the order book. You know, look out a few percentage, you know, 10% from price. There's almost 1,000 BTC to buy, and below there is slightly less on the bid side to absorb any selling. So I mean, like I don't know what price it's going to be exactly, but I get the feeling, not just from BTC, right, from the rest of the market, that we're looking at a blow off soon. So TIA. So about TIA. So what I said about TIA is, let's go to TIA. I said about TIA is that I am willing to hold until, I'm willing to hold as long as we hold 5. So the reasoning was, let's go back here. Just from the origin. So the origin of this move, this is basically an anchored VWAP from the origin. Even though this is a yearly VWAP, this is the starting point for TIA. So this that $5 level was back here. That was our anchored VWAP from this whole move. So kind of a line in the sand for bull bear control. You know, things can start getting a little slippery when you have a really strong trend that starts to lose its anchored VWAP for that trend. You're putting a good amount of positioning underwater, especially if you have the case where open interest, you know, if you have a futures product and open interest hasn't really changed much and hasn't responded to that significantly, you know, and then the market starts to move lower below VWAP, and you start to see some liquidations come in. You start to realize that, you know, a lot of people are about to be offside soon. So this ended up holding. As far as TIA goes, though, like, I am mindful, like I said earlier, that it's not often the case that an alt just does this, right? Just does this up forever, right? A lot of times you'll see that alts might do this for, let's say, 2 months, and then the reality is that, you know, what you have to look ahead to is, you know, it did this, it roofed for 2 months and then corrected, took out its lows, and then needs, because it's a newer pair, a whole new reaccumulation structure before continuing. And a lot of alts that are new do this. And why is that? Because like I said, like right now this might be favorable from an unlock standpoint, or it might be a different situation with FTV, but with a lot of new alts that have a really high, not FTV, with TIA, I'm thinking flip in my head. Let's go take a look at this actually right now. Well, actually, let's look at the unlock data. So Celestia. So here's chain flip. Only 20% unlocked. So here's just a list of unlocks. All right, Celestia. So we'll get Tia. Tia completely unlocked. No, it's not. So either way, going back to a lot of these alts that have things yet to unlock, right, and have supply that's yet to hit the market. Again, there are people that are well into profit already, regardless of where this price is right here. Like when you get in on something on a seed, you are right from listing, you're up tremendously. Okay, so as the market moves up and brings in new buyers and new positioning, that is becoming it's becoming a lot more attractive to sell at the moment that someone gets unlocked. You have a lot of new higher cost bases at that point, new positioning, so a new holder base potentially. And if it's coming on the back of a move that has a ton of momentum and is kind of vertical, it doesn't have any kind of basing out or establishment of value, right? So it's sort of market needs to find fair value. And after a really strong move, right, and a move that is following the rest of the market, it's imbalanced. Market hasn't had a chance to find fair value, especially with alts, right? This is not the next Apple, right? And not just speaking about Celestia, but if you had a basket of 10 new alts in the same situation, right, have yet to have the entire supply hit the market, you're going to have the inevitable complete retrace and then actual reaccumulation period. Okay. And if you could hold the listing price and you could hold it for months and the market is clearly putting in a floor, then that might be the last low that you get to actually participate in before this thing does leave this behind forever and this becomes something you need to put on a log chart to see. And then maybe it goes on to move up however many percent and then still put in an 80 to 90% pullback, but so do I think that I don't know. As far as TIA goes, is that going to be the case with this in the next month or 2 months? I don't know. Is it going to be the case that this probably comes back down through 5? I think, yeah, but at what point? I'm not sure. I own, so just to give you an idea of my positioning, when it comes to Celestia and when it comes to flip, I picked up spot that I threw on, so I threw my flip on a hardware wallet right away. And Celestia, I don't know if it can, so I have an engrave and I have ledgers, I have a bunch of different wallets. But it's not able to be put on my engrave, so I couldn't throw that away right away and keep it from my hands from selling. But my positions in these are patient. I'm not looking to offload these anytime soon. So I'm probably going to wrap it up soon. Yeah, there's a lot of rambling during the stream. There wasn't exactly a plan. Plan for the week is, though, so as far as tomorrow goes, I want to see that this move is followed up by coin as well. So if we're going to continue to see that futures move up, that BTC moves up. Same aggressiveness is on the CME. I want to still see that coin is following as well. I think coin is I don't know, it's a shit coin, but then I go back and forth thinking it's a possible, it might be the better indicator above anything, but I'm not 100% sure about that. But I do want to see that the market, but regardless of whether or not that's true, I do want to see that the market is kind of maintaining this behavior, and there's no sudden disconnects between coin and BTC, and between, like I said, the futures, CME futures, and crypto native BTC. So I just want to see that behavior is maintained moving forward. As far as levels go, I mean, to be honest, this 40K level is pretty significant. There's not really any concrete levels below us, to be fair. So this 40K level is a significant break. So far, we've loosely maintained this upward trend line. I mean, this is a dynamic support at this point. Like I don't like trend lines and stuff like this. I draw them when the market is like really obvious. But as far as like support level, now that we've flipped this high, you should see that if we do, let's say we do get some kind of pullback, if we have like a gentle pullback, or we just have this kind of standard pullback that we've had, no blow off yet, you should see responsiveness at this 38.5 level. Now, obviously, reason being that you still probably have people that are shorting this, or even hedging at this point, and now they're underwater. And if we get a move back there, ideally you want to see them close their position out and help this continue to bounce, and maintain the structure upward. But there's not a whole lot of structure to go off of as we continue to move vertically. So it's tough. Things are overheating, so pay attention to funding rates. Like I said, now for me, it's more about paying attention to how everything is trading with respect to each other. So paying attention to alts as BTC moves up. Like, are we starting to really just borrow from everybody else? Like, when BTC moves up, is ETH moving up with it as well? No, you can start to see that ETH is actually beginning to suffer against BTC again. CME aggressive right off the open, though. As far as ETH goes, similar idea with UIDX. Like, now that we have a major range breakout, regardless of how you cut it, if we look at this on, so we'll just get rid of all this stuff right now. So this is weekly, just daily. Clearly a major inflection point going all the way back to, last year. So long time in the making, finally breaking through that. 2100, I think, is 2150. 2100, 2150. I mean, unless we lose that decisively, I think this is going to start to take everyone's attention. Let's see, how much time do you spend looking at charts? Actually, not a whole lot of time looking at individual charts. Spend more time charting during these streams than any other time, because most people are familiar with looking at a chart. So I'm gonna wrap it up though, guys. I will go live sometime during this week, probably on Tuesday or Wednesday. Let me just take a look across the board right now. The last couple hours. So, big time, yeah. Someone just mentioned in the chat. BONK, Badger. See, with something like this, for example, probably just get away with buying BONK up here again with a break of this all-time high, because you're still, this is a similar situation as ordinals. The idea that it's even longer in this case. you probably get a nice continuation move here. All right, guys, I'm going to hop off. I ended up just riffing and rambling a good amount. So hopefully you guys got something out of this. I know I said so this Sunday stream thing is going to be new. So next Sunday I'll definitely have a lot more structure, or we just talk about the week ahead. I mean, it's been an exciting market, right? So it's not like anyone needs any major updates because nothing has really changed. We're continuing to just move up. But every Sunday now I'm going to be doing this at 7:30. So if I didn't mention that earlier, but that is the plan.